Welcome to Real Talk with the Pros. We are here to spotlight the people, the partnerships, and the possibilities shaping real estate across West Virginia. I'm Tammy Halford.
And I'm Chris. Today we're joined by Ray Logue with Loan Depot, a trusted name in home lending and someone who's helped countless buyers navigate the mortgage maze with confidence.
Whether you're buying your first home, refinancing, or just curious about how lending works, this episode is packed with the practical insights and expert guidance from Ray.
We'll be diving into everything from loan types and credit myths and market trends, especially what's happening right here in West Virginia.
Today's episode kicks off a multiple-part series with Ray Logue, diving deeper into the ins and outs of the mortgage process.
So sit back, grab your coffee, and let's dive into the world of home lending, or Real Talk with the Pros.
All right, we're here today with Ray Logue with Loan Depot, and just want to start out basically, what is Loan Depot, where are you located, and tell me about you, Ray. How'd you get in the business?
Okay, so I'm located here in Fairmont, and I've been in the business since 2001, and so that's what, 24 years.
4 years?
Yeah, right?
You don't look a day over 25.
Shoot, that's how all you have to do is tell me I'm pretty.
Right. All right, go ahead.
And I've been doing it since 2001, and I really like my job. I've enjoyed it. I've enjoyed getting to meet people, work with people, and help them get into the homes and refinancing and all the things. And I love the people in the industry too, right? So I've really enjoyed working with the realtors. I enjoy working with the attorneys. I enjoy working with like fellow loan officers. So
Sure.
all of that has kept me in the business. And I'm just really grateful because this town has really supported me. I mean, I work all through West Virginia.
And you were born and raised here, right?
Yep. And you said to tell you about Loan Depot. For me, it would be kind of like, why Loan Depot? Why did I go there? Because I was at my previous company for 16 years. So it was a big deal for me to leave, right? Because I love that company. And
Sure.
I love the people. And so for me to make that sort of change, I was really looking for something special. And when I came here, I ended up partnering up with Michelle Hamilton. She's another loan officer that has similar experience to me. I want to have the biggest net, right? I didn't want to work from 620 credit scores up, or just have a certain segment of the different loan types like FHA or VA or conventional. I wanted to be able to use them to their fullest.
Okay.
And so we looked around and we came to Loan Depot, and I can tell you that I get recruiting calls every week, and every week I tell them that I'm not interested, right? I'm like, Thank you so much, but there's no way. And the reason for that is because Loan Depot really supports us, right? They do mortgages. That's all they do. They do them well. And when we call, we work through things, and we can hold them to the guidelines too. I mean, we go out, we try to generate business. We talk to people about what we can do based on the guidelines that are set forth, with FHA or VA or USDA, conventional, and all the loan programs that we offer. So for me, having that book and having those guidelines and parameters to work within really worked well for me. So, and I just wanted to be sure that whatever company I went to, kind of stuck to those guidelines. And I mean, Loan Depot does, with a few exceptions of some overlays.
Gotcha.
Right.
Well, that's good.
And if someone is just starting out and looking for home ownership, what is the first step when looking for a mortgage company? What you should do? For me,
I would certainly look to your realtor. If you've already identified a realtor, you need to look to that realtor and ask them, like, who do they work well with? And they should give you a few options, but when they do, you really need to look at those options strongly. And the reason why is your realtor is going to help you throughout the entire process. But if you end up going with a lender that they don't know, that they don't work with, or have zero relationship with, doing so is going to hinder what that realtor can actually do for you when there's a bump in the process, right? Because, if they know that person, they can call and say, hey, how can I help? But if it's an online company, they can call all they want. and they may never get an answer. Maybe they will, but the likelihood of them getting an answer from someone local is much more likely. And for us, I mean, our local reputation is everything, right? I mean, if you're working with somebody out of California, they don't really care who Tammy Halford is. You know, like the fact that you'll never send them another deal makes no difference. But locally, you know, Timmy hangs out with other realtors, you know, kind of tells stories about experiences, and that could really impact our business.
And I can't go knock on their door.
Absolutely. I would never want to work with a lender that I could not show up to their office and demand to speak with somebody. I mean, that does not happen with us because you could typically get us, but I would never want to work with a lender like that.
It's tough because if all you have is the phone and email and they don't respond, locally, just go, excuse me, I need some help, but they can just blow you off and not respond.
And again, with that relationship, you start to realize what someone's capable of what their word is worth, right? So if we have a conversation of like, hey, I just need a few more days, you're going to be able to go and speak to your seller or your buyer with confidence and say, hey, Ray just needs a few more days. Where if you're talking with a lender that you don't know anything about their background, then how comfortable are you going to be putting your name on that request for just a few more days? We just need to be patient. I'm comfortable with where this is going, and you know, that type of stuff. And you're not going to be able to do that if you don't know that lender well.
For sure. Now, what type of loans do you all offer in the house?
So we offer all the loans, I feel like, but the main ones that we use, we offer conventional, we offer FHA, we offer USDA, we offer VA, we work with West Virginia Housing, we offer their products, we offer renovation liens.
Okay.
Those are probably our biggest products. We also offer equity ones, you know, some more specialty products as well, but most of them fall within those categories.
Gotcha. So, yes.
Are there any misconceptions buyers have when it comes to mortgage approval?
For sure. And a lot of the misconceptions they're getting sometimes comes from the professionals that they're talking to. And I don't think those professionals are necessarily trying to mislead them, but they may say, hey, you have to have a 620 in order to get a correct mortgage loan. Well, maybe at their company, right? But that's not necessarily the requirement for you to get a mortgage loan. It's their requirement. So therefore you feel that it's, you know, the requirement across the board.
Right.
And that's not true. So I think a lot of people believe you have to have great credit. You have to have, you know, a big down payment. And just the other day I was chatting with someone that was telling me that they felt that they couldn't use their part-time job because they hadn't been there 2 years. But we were able to find out that it's not just a part-time job, it's their primary job, and they have a set schedule. So we are able to use it.
Okay.
But they were told by another bank that they would not be able to use it, but that's just not
You came
true.
through for them.
Right. So I think that's the biggest, those are some of the biggest misconceptions, but they really do come from people in the industry, right? VA loan is difficult. It's not, you know, it's one of our easiest loans really to work with. But, you know, a lot of people just have these, they hear things. And so once they hear it, they believe it's true. And it's just not always. I mean, sometimes it is, but it's just not always.
And that's why as a realtor, we give options. We don't just say, you know, this is a great one, go here. We give, you know, 3 or 4, you know, check them out. Because they're not all regimen and they're not all the same.
Sure.
So they vary in whatever loan they have, interest rates, all that type of, even the credit score, the bottom out. What is your, what are you seeing right now?
We can go down to a 520.
Wow.
Which, you know, a lot of buyers, I believe, in that situation would maybe not believe that someone could go down that low.
Right.
Now, credit score is just one piece of financing, right? So if you're above 520, we have a chance, but we also need, you know, probably an additional down payment. And a lot of times we're really looking for people that have straightened things out, right? Potentially you're at a 520 because of some things that happened years ago.
Right.
And if you've started to demonstrate new payment history and you've really gotten your finances together over the last couple of years, I mean, that's really looked at hard.
And then as we move forward, we are going to do a series of getting down into the weeds and learning more about that. So you'll be able to expand upon that about what else you need. And
the extra
so we're
items.
looking forward to doing the series with Ray.
Right. And but and also, how do you choose or help the client choose the right loan that they should be? Because I know going in, there's a lot available. And how would you?
Sometimes it's obvious, right? Sometimes when I look at that, there are really only a couple of options for that buyer. And those, I mean, we'll just show them their options. You know, it is nice when you have more than one option. And sometimes someone will come to me and this is the only option I have for their needs, right? For their current down payment, credit score, all of their scenario. And then occasionally we will have multiple options and we'll just kind of present those and talk with them and, you know, see what works best for them. I'll talk to them about, hey, if you could maybe bring an extra 2% to the closing,
Right.
we could get you into this little better program. So, I mean, we do present those options, but sometimes there aren't as many options to present. It's a good problem to have when I've got too many options for somebody that I could be like, well, hey, you're a veteran, so I've got this loan for you. You fit within USDA parameters, so I've got this loan. But you also have, you know, a 10% down payment, so I also have this loan. That type of thing. And most people will take, normally the best loan surfaces pretty quickly.
Yeah.
So let me ask you this: with the current government shutdown, are any of the loans affected right now?
Yes. But really, the major loan that we have affected is USDA. The
Why
other, so USDA requires us to get a sign off from them before we close their loan. And because their offices are not,
You can't get the
manned at
sign
moment,
off.
we're unable to get the sign off.
Okay.
All of the other loans, including loans that are government backed, we are still able to close, right? So we're fully delegated to underwrite VA loans, FHA loans, all of those other types of government loans. And so we'll go ahead and fund those, and it's business as usual. And then conventional, it's still business as usual. But the USDA loan, the fact that they require that sign off, it's a challenge, right now. And we're hopeful that the USDA will be open soon, or at least if they don't open up soon, maybe they'll make a temporary lift on the
Need for
requirement for that to be signed off on. Because if they would just lift that, then we could go ahead and close those loans potentially
Right.
before, and then get their final sign off, you know, when they do open back up. But at the moment, there's no reprieve on that I know of.
It's tough.
Maybe after the first ballroom dance, but
Right, exactly.
In the new ballroom, right?
but how does Loan Depot support buyers with low down payments or limited credit history?
So I think you would be surprised. There are so many options out there for people with not a lot of down payment. Limited credit is tough, but if everything they have is good, then likely that could be worked through as well. If you have limited credit and also some rough credit added in there, depending on how recent the rough credit is, it could, you know, certainly impact your ability. But limited is not always a problem. And, you know, we'll look at the whole application too. So if you have a co-borrower that does have credit and then you're on the loan also, and that happens a lot of times, you'll have a married couple and one of them just never really got on a lot of the finances, so they do have limited credit. But we'll look at the entire application. And as far as no down payment goes, you know, there are quite a few programs out there that assist with that, right? So that's not near the challenge I feel that everyone thinks it is.
So let's switch gears a little bit and go a little further after the loan is in process. the appraisal process. Can you go over how's that work? Once you are started, is you just go call an appraiser and tell them, hey, we need you here, or is there a software that you have to? How does that appraisal picking work?
Right. So for us and for most, the appraisal is we have a panel for each market, but that panel also would include like each loan type as well, right? So some appraisers maybe are only able to do conventional loans, but some are able to do conventional and FHA, some are able to do conventional FHA and VA, so we use the panel to be sure that it's fair, right? That it's not given to my brother, the appraiser, or my best friend, the appraiser type thing.
Right.
Every time. As far as, and I don't have a brother or a best friend. That's
just clarifying.
Neither of those things are true. But we do use a panel to be sure that it is rotated and that it's fair for the client. But with that being said, a lot of times we'll have people that tell us that, hey, the seller just had an appraisal. Can we use that? And the answer is no. And it stinks because it may have been done by an appraiser that we would use, right? It's someone that we've already vetted, but we won't use that appraisal because it needs to be ordered from the bank. Right. And there needs to be a process followed to be sure that that was properly rotated and that they met all of the requirements in ordering that appraisal. So occasionally we can transfer one from another bank, right? If there's a deal that, either you had a buyer on maybe an FHA loan that went south, and then there's a new buyer that comes to me, sometimes we can transfer that appraisal in. There's a process, of course.
Sure.
And then, but it has to be ordered through a bank. That's number one. We'll have you go through and sign your documents, right? So as soon as we finish everything up and, decide on that loan program that you were talking about, we'll send them documents and they'll go through and sign each of the documents. And when they're done signing the documents, then that's when they're prompted to order the appraisal.
Gotcha.
What's one piece of advice that every borrower should have known, before coming in, that you would give them before?
So you need to go with the lender that you're comfortable with. And once you're comfortable with them, you really can't it's okay to question, but you can't be argumentative with it, because if you want to drive the bus, you can. And we won't see closing near as quick as if you let my team help you. Right? Because I promise you, no matter how many mortgages you've done in your life, there's no way that you could have done as many as we've done last month, right? So the reality is we know what we're doing. If we ask a question, we don't do it, we don't dig deeper. Typically, even if an underwriter comes to my team and they ask for something that we know just is a little extra and not quite needed, we'll go back to that underwriter and say, hey, this seems to be a little extra and not quite needed. And basically try our best to get them to remove that, because if it's not needed, if it's a feel-good condition, we're not going to take that lightly. So when I come to a client and I tell you that, the screenshots you sent don't work, I'll give you all the explanation you need, but at the end of the day, the screenshots you sent do not work.
Right.
And, a lot of times, I'll go back and I'm like, hey guys, look at this. This could be my account. This could be your guys' account. It really, there's no name. There's no identifying information. I don't even know what bank these numbers belong to, right? It just doesn't work. And, a lot of people will say, I'm not going to order my appraisal until my loan's fully underwritten or until I'm final approved. That's fine, but the loan process is, typically anywhere from a few weeks. Probably 25 to 45 days, depending on different scenarios. And if you're going to wait till you're final approved to order that appraisal, or wait till every condition is signed off on, then that means that your day one for that appraisal starts in maybe 25 or 30 days.
Right.
You're pushing it out.
You're pushing it out. And that's okay. It's your prerogative. You can do what you want, but we will tell you along the way, we're like, if you do it this way, it will be delayed. And if you're okay with that and you can explain it to the other people in the process and they're okay with it, then we're okay with it. But it's not the way things are typically done. It's not the way we would recommend. people doing things, but occasionally, we'll have a client that they want to be in control of that loan, and we'll do our best to help them. But at the end of they can't blame us if things don't move along quite as quickly, because they're arguing with us on every step of the way that we're asking for. So, pick someone that you can work with. And again, pick someone that your realtor can work with. Your realtor's not going to give you just one number. They're going to give you a few. But pick from that list. Pick local, so that way, if there is a bump, and there will be, a bump doesn't always pop up with somebody with bad credit. It doesn't always pop up with somebody that's buying a bad property. It could be a title bump. And, even like a loan that maybe goes perfectly throughout the process with an online lender, when it gets to that closing, I mean, it's a 50-50 shot on whether or not that particular closing is going to go well, because, I told you I was with my previous company for a long time.
Right.
And I've been with Loan Depot now a little over 3 years. And I remember the first 5 loans that we did with each attorney in this town. And they were figuring our system out at that point, right? They had done hundreds of loans with Ray, but they had only done a few loans with Loan Depot, and that's been all ironed out now, right? So it's a very smooth process. But if you go to a bank that is only going to use this attorney once, twice, even if they use them a lot, and it's 5 times a year, you're still not going to have that process ironed out, and it's huge. So, I hope you choose me.
Well, that's
when you're buying a house,
right off the bat, because you specify in mortgage, other lenders are so all over, and that's your laser focus mortgage. So that's a big difference right there. I don't want a person that can do all. I would definitely, Loan Depot would. Your laser focus, what steps need to be done.
Sure.
But,
let go of the control.
Right.
People have hard times sometimes.
So, listen to find somebody that everybody can work together. And then, listen to the professionals you've chosen, and you'll have a great process, or at least the best process that you can have. And if that doesn't happen, it's going to be tough, right? Because if your realtor can't communicate with the lenders and attorneys and people like that and get that peace of mind that they sometimes need to be able to keep the rest of the process together and smooth, that's not going to go well. And then, so finding the right team and then listening to that team, right? You chose them for a reason, and you're paying them to help you and work for you. So at that point,
it's not their first rodeo either, so they know the ropes.
Right, exactly.
So from when you first started being a lender, a loan officer, from wherever you started, the technology from then to now, how has that changed, and how's that process made the process smoother or not?
There are definitely good parts and bad parts of the technology, for sure. Certainly it's gotten smoother because like fax machines, and no one ever mails me anything anymore in the actual U.S. mail. So it's much smoother that way. We have a portal where you can upload your documents and attach them to the conditions that we're requesting, which is really nice. And you would be shocked. At least I know that I'm still shocked at how people have adapted to that, right? And I think that COVID made a big difference in that. People just seem to have learned how to do things online a little better. But, during those COVID years, when I wasn't allowed to meet with clients, I wasn't allowed to go to closings, when we came back, it never came back as far as me seeing people. And I liked that, right? People would stop in and they would drop something off to me. And I would know them a few times at that point. I would have chatted with them, and then when their closing came, I chatted with them more, and then they're buying likely in my market or where I live, and then I see them at grocery stores, and it just develops a relationship. And that's the piece that I miss. The technology makes it a little more transactional, and I really loved getting to know people. I've made some really great friends in doing mortgages. but it used to be a little easier.
Yeah.
Yeah, the human aspect.
Yeah. We still try to provide that, but it's not as,
Not the same.
it's not the same, because they would stop by and bring it in, and people would call and they're like, hey, I'm just driving by, I'm going to bring my pay stub by. But now there seems to be such a comfort level and such a convenience level with sending it electronically.
Right.
And, sometimes I think they do it for them. And sometimes I think they're trying to respect the lender's time, right? Well, I don't want to just stop in.
Sure.
If I could just upload that, why would I
Yeah, be rude and just walk in. And
Right. But I really miss that piece of it. But as far as technology goes, I mean, it has grown and grown and grown, and we're still seeing new aspects of technology. But applying online is probably the biggest thing that I see. I used to take, pre-COVID, I would say I took 90% of my applications either in person or over the phone.
Right.
wow, it's huge.
Now, it's definitely 98% of them are done online.
Wow.
Now, when that application comes in, I try to call them pretty much immediately, right? And go over that, right? And I tell people, I'm like, hey, if you could just get me started here, fill this out, and get me a template, I'll call you. Don't be afraid that you're going to mess it up, because you're not. I'm going to go through it.
Right.
I'm going to hit all the aspects. Like people will commonly kind of mix up their income, and why they mix it up is they'll put a net amount, right? If their paychecks are $2,000 a week, then they'll put $8,000 a month, but the reality is their paychecks might be way more than that, because the gross income is what I need.
Right.
And so, but that's something that I clean up every time I talk to somebody. I'll chat through their assets, and sometimes they'll put things on the application that I know we're not going to need. So why are we going to document it? If you clearly have enough money in your checking, and you have a 401k, likely I might remove the 401k because
TMI.
well, yeah, exactly. And I just don't want you to have to dig through and find that statement if it's not necessary. I mean, if you qualify without it, then I will try to clean that up too.
Make it easy as possible.
And sometimes they just get mixed up and they didn't quite understand the question, but that's okay. And a lot of times, like as I'm talking, they're like, oh, I thought that was something else. And I'm like, listen, don't worry about it. I'm going to fix all of this in our conversation, and it's going to be right. And, right-ish, right?
Right-ish.
Because sometimes, I told you in the beginning, we send out that loan document. Well, the loan document includes your application.
Okay.
Well, people will tell me that things aren't perfect on there, and they'll call me, and they'll be like, well, my application says the house was built in 1950. And I'm like, well, it's going to say that until we have an appraisal that tells us what
Otherwise.
year that house was built. So for that, it's going to be, somewhat right-ish.
Right-ish.
And then we're going to listen to you, and we're going to put in the income calculations that you tell us. But at the end of the day, we're also going to gather your pay stubs and your W-2s, and we're going to make our own calculation. And that's the one that's going to go in the application. And so we're going to tidy things up. If you have $1,000, if you tell us you have $1,000 in your checking, and your checking statement comes in and you had $800, we're going to update that. If it comes through and you have $1,500, we're going to update it to that.
Yeah.
And probably the bigger thing that people sometimes will come back on is they're like, my debts don't look right. Well, credit cards only report once a month. So
It's the 15th and
right,
or
if
whatever,
it
halfway
says
through, yeah.
there's a $1,500 balance and you paid it off 3 days ago, it's still going to say the $1,500 balance. So that's what's going to stand on the application unless you provide us actual documentation. So, I mean, those are things that...
And I know that we're going to get more in depth with other episodes on the different loans and everything. But what trends are you seeing in the West Virginia housing market, and what should we be aware of?
So, I mean, I think the markets are switching a little bit. There for a while, when a house would come on the market, I mean, it was gangbusters on that house if it was a great house at a great price. And you're still seeing that, but sometimes like certain clients will need the seller to pay the closing cost. Well, oftentimes, if a seller's looking at a few different offers, one includes them paying the closing cost for the buyer and one isn't, they're going to maybe go with the one that doesn't include that. However, it doesn't seem like there are quite as many people jumping on the houses. So someone who does need closing costs has a better shot today, I would think.
I agree.
And I, just from, this has nothing to do with my professional life, but where I've signed up for Zillow and they email me, I feel like I'm seeing a little bit more in the way of some price drops, a little more than we used to see before. And, you know, if the seller's willing to drop the price, that probably also means that they were willing to pay your closing costs. Or, you know, maybe a seller would have preferred you know, a cash offer, but they're going to accept a financing offer because it's what they've got at the moment.
Well, we're going to wrap it up here for today. Is there anything that we haven't talked about you'd like to, and give some kudos out to your staff at Loan Depot over here?
Okay. Well, I do love the people that I work with. And the reason why I love them is because, like, Mitchell, which I don't think you've met Mitchell yet, right?
I don't think so.
Mitchell's our transaction guy, right? So he's sort of behind the scenes. We keep him in a cage in the back. We don't let him out very often.
It will put the lotion in the basket.
Exactly right. So, but he takes care of a lot of the backroom stuff, setting up closings, that type of stuff. And Mitchell and I have worked together now for close to 20 years.
Wow.
And I mean, we've worked really hand in hand for that long.
So you know each other very well.
Absolutely. And that's the only reason we've been able to work with each other for that long is because, you know, if I talk with you and you're like, Mitchell said this, I can almost tell you if he said that or not, right? And that, you know, that's a kudos to him, right? Because that means that, I mean, he's always honest. He's, you know, is consistent, you know, and some things I might not be happy that I think he said it, you know, but still I would know if he said it, right?
And that's why he's in the back room.
right. No, exactly. But no, he and I have worked together so long, and having that extension of each other is huge. And then my business partner, Michelle, we've been friends as long as we've been in the business together, but we were competitors until we came together at Loan Depot. And I don't know how she feels, but I don't want to do this without her, you know, at this point, right? So I truly enjoy working with her, and she's our guideline queen, you know, so she goes through, I think I'm pretty good at looking and solving problems, but the thing that she's good at is I might get a little too laser focused on one issue, and I feel like she does a great job at just keeping a very broad view on the loan to say, hey, I hear you, you got this going on, but don't forget about this. Or I hear you, but if you do it the way you want to do it, then we're going to have a problem over here. And I truly love that. But the reality is we just all work so well together. So, and I would say as far as the like Marion County group as a whole, whether it's lenders, attorneys, appraisers, I think we all get along really well, and that's fantastic.
The huge thing is you're local. You were born and raised here. And what about Mitchell and Michelle?
Both.
They both are. So everybody's local here.
Yeah, I'm pretty sure that Mitchell made Michelle a wooden heart maybe in shop class. Oh. So when they were like,
oh wow,
it was either Michelle or Michelle's sister that got a heart from Mitchell that was made out of wood from shop. But they were very, very young at that. I think like grade school, but it's fun.
That's
facts
awesome.
On, so they've known each other a little longer than I have, for sure.
Well, we appreciate you coming in today,
Yes,
and we can't wait for next week. We'll
excited to
talk more about in depth into some of the loans and answer some questions from our listeners, and just keep moving through the process. So thank you so much.
No, thanks for having me.
Absolutely.
you.
That's a wrap on today's episode of Real Talk with the Pros. Thank you to our guest today, Ray Logue with Loan Depot, for breaking down the lending process in a way that's honest, clear, and actually makes sense.
We covered a lot, from the loan types and credit myths to closing delays and market trends, but we're just scratching the surface.
Oh, and I am so excited. This is just a first in a series with Ray, and we'll be diving deeper into the topics like refinancing, debt-to-income ratios, how to position yourself for a mortgage success.
And if you got questions, real ones, about lending, credit, or buying your first home, send them on our way. We'll be featuring our listeners' questions on upcoming episodes.
Thank you so much for tuning in to Real Talk with the Pros. Like, subscribe, and share, and stay with us as we keep pulling back that curtain on real estate, lending, and everything in between.
Until next time, keep asking questions, keep showing up, and keep it real.